Recording is up. So once again, this is Yordan and you're with the Friday session for today, April 27th. Once again, to repeat that, on Fridays, we do a summary of our trades taken during the week based on the strategies that we're using. Okay, so during the week, we're basically covering the analysis, why and what and how should be traded, directions, etc. And on Friday, we focus mainly on the softwares and how and why the setups were taken. So let's go ahead. Actually, first of all, before we move on, this is how the week ended for us. The biggest achiever this week was the Libra code, followed by Crystal Ball, then we have SRS, then we have Triple B, and then we have three losing strategies for Scorpio, Gemini, and the Divergence University, which is basically the trades taken with divergences. So that gives us a total of almost 5%, which is still not bad considering the fact that we have three of the losing strategies here. And you can see the power of a risk reward basically in this statement. So it's important to protect your capital. It's important to minimize the risk when possible. This is one of the specialties that Scorpio is doing for us automatically. You have seen that many times in the past. And that being said, let's go ahead and check out some of the trades we took. Starting with SRS. The week began 23rd, so we're looking at the trades from here up. CAD-Yen, the first one that we had was right here. Conservative sell idea coming after this strong push. What we had in reality is this double wave, right? And boom, here is where we got the entry. Now, let's go ahead and quickly remind what is the idea of SRS and how should we trade it. The main idea is to look for the direction on the higher time frames, specified usually by the reports or using the dashboard. Okay. Once you get a signal, what is required from you is to simply go ahead and check whether we have a valid trend line or not. And for us, a valid trend line means the following. When we're looking for sell, we want to see a clear double wave up. We connect the two dots, and this is where we're looking to sell, right there. So if that's 1, 2, 3, 4, we connect 1 and 3. 4 must be above 2, and then the situation becomes more or less valid. Another point that we should mention here is the touch points on the trend line should be more or less equal to each other. Of course, you're not measuring it pip to pip, okay, but visually looking at it, it shouldn't be like, let's say, something like this, okay, because then the distance is simply too far away from each other, and this is not the most reliable trend line that we can find. Additionally, what you could do, for those of you who know how to use divergences, you can apply an extra filter, which means if there is divergence between points 2 and 4, that gives you extra confirmation. All right. So that being said, as a reminder, this is our trade. That was the sell that we took. False break of the trend line right here, and the price kept on moving up. So that's the first trade. Then we have Pound Aussie. Again, beautiful double wave up. All right, coming almost for a double top here, missing a few pips. more or less equal distances, and we're going for the aggressive sell as the dashboard suggests. This one also created a false break and immediately pushed higher. Okay, pound kiwi, a buy trade that we had. This is the 15-minute chart conservative setup, and now I would like to ask you, what do you think about this setup, guys? Because the previous ones were more or less clear by the book setups, but what do you think about this one? You mean tough to decide whether to take it or not? Based on direction, exactly. Looks good. So, right, again, we go ahead and try to validate it. First of all, you check for the directions, however you do that, reports or menu or whatever is in your plan book, and then you look at the trade, the setup. Is this a valid one? Yes or no? If it is a yes, then go ahead and trade it. Right? Tiny pullback, but you see that the move up is pretty strong. How about this one? Would that be a valid trade? Considering that the direction is checked. Yes, of course. We got more or less a double double bottom. In that case, you might want to go ahead and check for divergences and weakness for this bearish momentum. And then once it breaks, because you know that the direction is up, okay, it would be also a valid trade. Now this one, we can't really draw a trend line here, even though that we have more or less the same scenario. The trend line is going up. So that's not a valid one, right? And we skip it. All right, Ruth, go have some sleep. I feel your pain. Yeah, in this case, I admit this is not the clearest move, but still technically correct. And that's the only reason why the trade was taken. Right? Direction, tiny stop loss, we're attacking, we're going with the momentum. And we have conservative setup. Okay? So that's about this one, pound kiwi, pound cut. Another tricky one. What do you think about this one, guys? We said that there is a triple cycle. We are expecting a move up. Price did form a false break for us. Later on followed by this up move. And then this is what we get. Exactly. Good for me as well. Would that be a valid trade right here with this trend line? Double. There you go. Exactly. So if this is the first one losing, okay, because we're going to reach the stop loss here or here, then we check out the next one. And the next one, as Tiat says, could be seen as double, right? Or could be seen simply as 1, 2, 3, 4 as well, which is going to be also valid. This one on that stage is more or less also valid. However, in that case, it seems like we're squeezing it too much, even though it's correct. Okay, it is correct. You're going to win a few pips in terms of entry. So yes, a bit more aggressive for my taste, but still totally correct. So you can see that there are basically three ways to go ahead and trade it, besides the first one, which is a losing one. So if that happens, does it make sense for us to go ahead and attack second time? If yes, why? Okay, I would accept that. Exactly, Clive. That was the biggest thing for me here. Double false breaks, guys. Okay? This is the first one, this is the second one, and now again you find yourself in a situation where you have second opportunity. And since the risk reward is on your side, okay, you can simply go ahead and give it another try. You know that every two positions you lose are covered automatically by one winning position. Because you know the direction, that gives you already 50% better chance of succeeding. It's all about the statistics, guys. Think about the statistics every time you have doubts in your system and in your trading. If you know the basics, how a trend line should look like, if you covered it with divergences and that's also supporting you, if you know the directions on the higher time frame that you should be trading, you know that you're technically speaking trading with the statistics on your side. Okay, so this is huge for psychological factor that helps you keep on moving. You must understand that losing is part of this business. Like any other business, there could be bad periods where you're not realizing profits. If it's, I don't know, seasonal business, you're selling gifts or you have a gift shop, souvenirs, you know that during the Christmas period, for example, or any other holiday, you have peaks. You're going to sell more rather than selling during the summer because people go on vacation, etc., right? Same story comes when we speak about Forex. You have better moments, you have worse moments. As long as your overall is on your side, which means statistics, you're good. Okay? This one pushed higher and then immediate strong push to the downside, closing the trade in a loss. And Ripple, this one also more or less beautiful. Not sure why we draw this trend line here. The basic idea for this trade is the big trend line or the small trend line. All right. If you're trading the bigger trend line, then you have that. Okay. 1, 2, 3, 4. In that case, the distances would not be ideal, but before we ignore the trade and skip it, let's just remove everything for a second. See what we have. Okay, so basically two touch points creating one bigger touch point, and then we have that, which is more or less equal points once again. And furthermore, we can see that as a wedge, but this is already not SRS trading pattern. Okay, what we care about is a valid trend line that suggests confirmation for us before we pull the trigger. And of course, you know that Ripple, actually not sure if you know or not, but we had the 4-hour chart cycle, we had the 4-hour chart divergence coming in place. So this is the perfect moment to go ahead and look for aggressive sales if you want to be aggressive. If not, wait for the initial move down. Okay, look for the significant lows that must be broken. And then looking for the double confirmation as we are teaching, applying SRS once again. Okay. why am I missing the spike? I have a question. Simply because that was a false break and the market is respecting this trend line. That's the only reason. And if I had other spikes, I would then draw two trend lines, creating for me a zone. Okay, so let's give it a shot and draw it here. Let's say this is one of the trend lines. Then you have another trend line, and this is basically the zone of the channel above and the zone of the channel below. We know that supports and resistances are never a single level. They're always a zone, right? And that's very well seen and applied when we talk about horizontal ranges. We always have move, spike, move, move, etc., etc. So then you can cover the spikes and then you can cover the closing parts. And this is how you draw yourself an action zone. Okay? Clive, clear on this one? No problem. So that was about repo. We had this huge spike, which in our case did help us to reach the target immediately, more or less after a few candles. So that's about SRS, guys. Yeah, SRS, sorry, I thought I said repo. Any questions, anything not clear? Yes. Aggressiveness sometimes works in your direction. It's always 50-50, right? I mean, sometimes it works out, sometimes it's losing, and that's why you take the extra risk. But in this case, with the spike or without the spike, keep in mind the 4-hour chart cycle was in play. It was beautiful cycle, exactly by the book. So I don't think even without the spike we were going to lose here. I mean, look at that. Can it be any better than this? So basically we're trading somewhere around here. Absolutely by the book. And furthermore, if you want to be extra confident in your trade, look at this zone that I marked for myself right here. So this is basically a very tiny narrow range where the price was respecting this zone, okay, and we bounced exactly from this zone. Didn't even reach the top of this tiny range on the smaller time frames right here. You see? So this is basically how it all comes to the same point. And before that, we were discussing this triangle. We said that we want to see the push up, this divergence to form and complete itself. And this is exactly what we got. So we have an idea for a buy. Once the divergence appears, you can now start look for the sell opportunities. And we got a pretty strong candle with this spike, suggesting that this level is going to be respected, and we close below it. Thank you. And if you think about it, it's only very logical. Price action is telling you what people were thinking and doing. Because I might be saying whatever I want to say, but when I click the buy or sell button, so let's say I'm saying I'm going to buy here, but then I sold. So I can't lie when it comes to price action. It shows on the chart, right? That's why it works. And it's really, really, really simple to go ahead and do this kind of analysis even without any type of indicator. It's pretty obvious where the price is respecting a given level or not. So chances are once you reach such a zone, like this one, for example, here also, you're going to see some type of reaction. If the price is coming above it, right, you're going to bounce. If the price is coming below it, you're going to hold and most likely bounce. In this case, look at this. It didn't bounce, but it stopped. It was, after all, respected. So unless you didn't get some type of breakouts or so, it's here. Okay? That's about the Repo one. There we go. Well done. Well done. Simplicity. That's all. I was never a complex trader, if this is valid to say. I always like to stick to the most basic things that just simply make sense and are logical. Next one, guys, triple B. Let's see what we have here. We said, what's the date? 23rd, right? Let's work our way above. Aussie yen. Sell idea. One, two, three. Before we move on, let's go ahead and talk about triple B and the idea of triple B. For those of you who are for the first time here. Triple B, guys, is more or less based on Bollinger Bands. Amazing indicator. We are using the default settings. Just again, a logical combination of using the higher time frame with the lower time frame. So what we are doing is basically checking the higher time frame slope of the 20 MA of the Bollinger. This is the 20 MA of the Bollingers, all right? You have three lines. The middle one is the 20 MA. Depending on the direction and the slope, we want to look for sells when the price is below 20 MA, or when the 20 MA is going up and price is above it, we want to look for buys. The idea is very simple. Once we are looking for sells, like in this situation, we want to see double wave correction coming above the opposite band, because in that case we're looking for sells. And once the price closes back below the upper band, we're looking to sell. As simple as that. Of course, we do have here the dashboard, which gives you other indicators and other filters that can help you take the trade. But the general main idea is that simply based on multi-time frame, Bollinger Bands direction, and then we're looking to trade it. So the only thing that you need to remember as a trader, once again, is the 1, 2, 3, 4. Simply count to 4. Okay, same rules apply here as we have in SRS. In that case, though, we don't rely on trend lines. Okay, we do rely on the fact that we're going to attack at the very top of this potential correction. The top of these zones that are highlighted is pretty much the 20 MA of the higher time frame. So you know that the price is still below the 20 MA here, right? Something like that. And this is where your opportunities come. That being said, is that a valid trade, guys? You have one entry here and one entry here. Yes, it is. Exactly. It is. This one, yes. This one, no. The first one, no. Why the first one is not a valid trade? Because that was the first push. 1, 2, correction. And this candle did not actually form a higher high. You can force it and call it a double top. Okay, missing a few pips. Again, you can still force it. If you're going for a longer term target, then yes. If not, the short term target is always the lower band, which means in that case it wouldn't make a lot of sense, because this is the 15-minute chart and you're kind of limiting, unless you're scalping, of course. I wouldn't take this trade. Okay. On the other hand, this one does have a bit more room down at the moment of the entry. All right. And now we officially have a false break of point number 2, which means point number 4 is now higher than 2. This one would be much better idea to go ahead and sell. And again, what we're looking for is patience. Okay? How about SRS trade? Let's mix it up a bit. Would that be a valid trend line, guys? Few more answers, please, to keep you awake. Looks correct, yeah, indeed, it is. 1, 2, 3, 4. Tight one, but still correct, why not? Correction is healthy, we broke the 2 candles. Boom, boom, boom. Okay, so back to our trade. That's the first setup that we had. Is this a valid one? No, it's not. Why not? Because we don't have a 2-wave move here. We did have a move, some kind of tiny correction and then continuation. This is not a healthy pullback, guys. Right? No need to force it. When you look at it next, that's more or less a healthy flat move correction. Right? And now we have a duplication. The first one was here, which is the 61.8. That would be also a valid trade. Why? Because we did broke, false break, coming after the correction. It does look good. Okay? We missed this one. If I would see it, I would take it. Most definitely, it does look correct. However, we have another chance, and you can see here the stop was clearing. First false break, and this is more likely going to create a second false break there. Okay, so yes, indeed, a valid one. Because we're looking for the longer term target, the short term was not closed here, right? And unfortunately, price pushed higher, closing the trade in a stop. That's Aussie yen, I believe. Yeah. Pound franc. Next one on the list. Let's see what we have here. Again, we're looking for the slope to be up. Check, it is. Right. Price is correcting currently. This is the higher time frame. This is daily. We're trading the 1-hour chart in combination with the daily. We see that we're most likely inside a correction. Price is coming closer to the 20 MA, which means good risk reward for us. It's not like buying at that case, right? Because then the stop loss would be all this distance. We then have this kind of move, okay? But the problem in that case would be that we don't have a valid correction. Right, so these entries at that stage would not be valid. Later on, we do have from this high moving lower another double wave. Right now, the price is standing much closer to the higher time frame 20 MA, which is somewhere around here. Okay, the risk reward is much better, and we do have on the 1-hour chart a double wave here. All right, so boom, makes sense. We go ahead and take this trade simply because it makes a lot of sense. As this is the 1-hour chart, we go for short-term trading, which means scalping. In that case, we're looking to close the trade at the opposite band. That's the higher band, right? The upper band of the Bollingers. We are attacking the lower one. Very, very simple. Okay? That's about pound franc. Aussie franc. Looking for a buy. Where does the buy come from? Up move on the higher time frames, and this is where we have a double trend line. Double wave down. Right? Simple, simple, simple. we also did come closer to this supportive zone. We have another one right here. So if you're looking for the longer term targets, and you go ahead and buy, and the price starts moving up, and you still didn't reach the higher time frame targets, that place might be a good zone for you to cash out completely, or at least move the stop loss to break even, or at least cash out target number one. Because you might see the price pushing lower, maybe even creating lower lows, or going for a range, etc., etc. But this zone is important for you. Okay? So that's about the Aussie franc closed here with a stop. CAD franc, the next one on the list. Double wave, false break. Do you see the zone? That's the tiny one. You have more candles here suggesting the same zone, and then you have this false break, which more or less is then going to create for you this type of bigger range with this candle as well. So we are inside the zone. Price did break above it. Correction respecting the zone. Another correction pushing down. So first of all, we can say that we have two bigger waves, okay, coming to this fantastic level, the bottom of this level. And second of all, we have also the short-term one, okay, slope moving up. That's all, right? Nothing more than that. Does it make sense? Is it correct? Yes. Do I accept the trade? Yes. Lose, win, I don't care. I know that in the long run, I'm going to make money because I'm following a few simple rules that have proven over the time that it will make money, okay, in the long run. Here we go. Oh, actually, this one was a winner, but again, even if it was a losing week for this specific strategy, don't go crazy. Pound yen, another losing one. Downtrend on the 4-hour chart. This is the 15-minute chart in combination with 4-hour chart. Double wave correction, trend line, right? And we got the entry right here. Absolutely valid. Would this be a valid entry right here with this candle? Yes, of course. Why not? You have a double wave, you have a false break, right? The only thing is that it's too big, the risk reward. Here, not that better, but again, you win a few pips. Okay? Usually what we do, guys, is when trading the 15-minute in combination with the 4-hour chart, we're looking for the longer term targets. Okay? When trading the 1-hour chart plus daily, we're looking for the short-term targets, quick scalp in and out. I'm not saying this is the only or the correct way. This is simply what we have decided to do. So you might apply it, you might not apply it, you might apply it in some cases, but this is basically how we try to operate. And that's why many times when we're taking the short-term 15-minute trades, you have a correction and then the risk reward in the beginning doesn't make sense. But if you have high win ratio, then it starts to make sense because this is scalping. Okay? That's basically the idea. This one also closed in loss above once the price pushed higher. Kiwi cat, sell opportunity. 15-minute chart, once again in combination with the 4-hour chart, we are pushing lower. There is this double wave coming here with a false break. Okay, and I believe, no, we didn't, my bad. I thought we had a false break, but it was another trade. Anyway, the idea again is the same. Double wave up, and we're looking for the entry. Okay, as simple as that. Another trade, Euro cat, looking for a buy opportunity. Price is moving up. Okay, and that's our double wave in that case, coming with a double top or a small false break. The only thing we might be paying attention in that case is this big candle, which stands in the way, but that was the weekend gap, and that's why this candle was ignored. I believe you're going to see it better on the next screenshot. Yeah, here, this one, this is what I'm talking about. Right, so this is basically the weekend gap, and that's why it was ignored. The double wave is still valid in that case. Okay, just like we had the spike in Ripple, I'm not going to include it into my analysis now. Right, so for me, basically, this is the move up, the move down, move up, expecting another move down. That was some crazy spike caused by most likely robots. Okay, because it happened in seconds or minutes very quickly. So the technical analysis is not affected, as per my understanding, when you have such a spike. Okay. How about the next one? Would that be a valid entry? What do you think, guys? Yes, no, maybe, definitely maybe. No clear to wave, but still bend to bend. No single leg down. Yes. So basically, guys, you're in the right direction. I'm zooming in a bit. This leg on its own is one straight leg, which means this is not a valid entry for us. Yes, it would pay. Perfect. No worries about that. But how about these two legs? Why is that not valid? Remember that each cycle, each leg of the cycle must be a cycle on its own on the lower time frames. Okay, so basically we have, where is that? Double cycle, correction, double cycle, right? And that more or less forms for us one bigger cycle. So in our case, we did enjoy the first move right here, closed later on, but still we traded the first leg. Okay, and we actually got lucky because the price managed to hold above the 20 MA. But even if you did miss this opportunity, that would be still a valid entry for you right here, because this is a bigger double wave and you actually get much better prices, much lower, and with much better stop loss. Yes, exactly. But again, as I told you before, it's 50-50. One time you catch the not so good one time you catch this one. Okay, we are not robots, we can be always there. So this is how it looks for the manual trader. Okay, but statistically I'm pretty sure it equals out to the same percentage. Sometimes you catch the good ones, sometimes you catch the bad ones. Alright, EuroCAD, this one, Euro Aussie, another losing trade here. And we said that as long as the 4-hour chart trend line is holding the price above, which is something like that, we are looking for buys. Any pullback is an opportunity for us to go ahead and buy. 4-hour chart MA is pushing higher. This is the slope. We can clearly see it. So we are looking for a double wave down, right? The first double wave comes... No, actually, this is not really a valid correction for us to trade. So that's the first leg and that's the second leg. Okay? Technically, this one wouldn't be tradable for me simply because we don't meet the 2 candle rule correction here. That's the only reason. But then again, you have a bigger wave providing you with the opportunity to go ahead and buy. Now, speaking strictly about the second leg, can we find a setup here? Move down, not really a valid correction, right? And then another continuation down. So these two legs on their own are not really tradable. Looking at those independent legs as one bigger leg, one bigger cycle, now starts to make sense. Is this trend line going to be a valid trend line? Yes, absolutely. Clear double wave down, we have good direction, looking for the buy opportunities. Okay. This one also made the move down, unfortunately, and it lost the position. Kiwi yen is the final one that I have on the list for triple B. And there you go. First of all, we have a trend line above us. Okay, price is trading very, very close to the 20 MA on the higher time frames. And then we have a beautiful double wave up, false break or a double top, not really sure from here. And we're going for the sell. Okay. And this one, oh, this one actually short-term trading, not sure why. It was a scalp here, but it was collected on the first target. Any questions, guys, regarding triple B? Or we shall move on. Let's go to Scorpio. Scorpio, I believe, was a losing one, yeah, this week. So we good, we move on. All right. Pound cut, looking for a buy. Why are we looking for a buy? The main idea when it comes to Scorpio is the following. We want to have 4 rising or 4 dropping Scorpios. Those are the Scorpios I'm talking about, okay? Depending on the situation and the direction. So basically 4 dropping Scorpios when we want to look for buys, or 4 rising Scorpios when we want to look for the sells. In that case, because of the time frame, we can now see the cycle clearly. This is our 4-hour chart cycle being completed, which means we now want to see up moves. Furthermore, we had the false breaks, okay, and then we got the 4 Scorpios down. Because this is an aggressive entry, we want to have an extra confirmation. In that case, we have an action zone here. Okay, that's pretty much the idea behind this trade. closed here by the time MFD switched, okay, and we pushed lower. So this is basically triggering the trail stop loss feature. That means, what was that, pound cut? That means we're more or less trying to minimize the loss, and it does work. That's the idea. Instead of losing, let's say, 0.5%, you're losing only 0.1%. Well, yeah, I mean, every strategy has peaks and lows, right? Depending on the market conditions. And this is why we're using different types of strategies with different ideas behind them. So when one strategy is not making money, the other one is still trying to provide. That's the idea of diversification, spreading the risk. And in this case, we spread the risk using different approaches towards the market. So basically, any given market condition is covered, and we can make money regardless of what's happening. Whether we have a range, whether we have trending, reversals, all that covered. Okay. All right. So pound cut, euro yen. Euro yen looking for a buy. Well, in this case, it's kind of obvious what we are doing. At least for me, there is a range. All right, this is the 1 hour chart, and we have a beautiful for Scorpio formation going lower. Now this Scorpio kind of lower than this one, so technically this is going to be not valid. Okay, even though in that case, given that everything else is in place, if I didn't have this one, I would probably still trade it. Okay, I would probably still trade because this is a beautiful double wave down. No doubt about that. We just have a spike of a few pips probably. However, we do have a higher high, so no problems. We can clearly and beautifully validate it. Bottom of the range, and this is where we're going with the attack. Okay. It will come in time, and also it depends whether you're trading full time or not and what time frames you're trading. If you go and trade the 15-minute chart and you trade, let's say, 20 or 30 instruments, it would be challenging, yes. Especially for a single person. That's why we have a team of traders, and everyone is taking piece of the pie, if we can call it that way, taking care of its own tasks. Okay, that's how we achieve it. But yeah, in the long run, I'm pretty sure that you're going to find a way. Yeah, I mean, if you're trading the 1 hour chart, honestly speaking, you have one setup maximum per hour to check, right? Or the 4 hour charts. And the price cannot really move that far away from you in just a few minutes. Because when you know what you're doing, I'm sure you're already at that stage where you see the setup and it takes you not more than 10 seconds to assess whether this setup is valid or not. So let's say I get alert, boom, I go ahead and check it, yes or no. And then if you have multiple alerts, you can go ahead and check everything in not more than 5 minutes, which means the price is not going to move that far away from you in these 5 minutes, 99% of the time. That happens because at the close of the hour, when you have, let's say, 15 charts running with the software, once the bar closes, boom, 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 if there is a setup, you get the alert. Yep, that's normal. Exactly. All right, let's move on. Euro yen couldn't kick out the trade. Good for us, and then we cash out at the top. That's this one. Cat franc, another buy opportunity. Now, can you guys tell me what's the idea here? This one is tricky, so I want you to focus, especially the Scorpio traders, and tell me why this trade was taken. Let's start from the obvious one. Is that a valid 1, 2, 3, 4? A bit forced, but still we might say it's valid, right? Why forced? Because we had a break and false break with a few pips above here that makes this Scorpio slightly higher than the first one. And in our rules, we say that 1, 2, 3 must be below 1 and 4 must be below 2. Okay? So yes, that would be forced. And if you want to be strict with the rules, this is a no-go here for a buy. However, if we look left, we have two Scorpios creating for us a huge range. Okay? This huge range means that the trades inside would not be that valid, if we can say that, if valid at all. And that would be a very aggressive trading because we're stuck in the range. Okay? You remember the range rule. Which means the only way to trade it would be if we have one of the Scorpios of the range included inside the cycle that we're measuring. In our case, this is the count. 1, 2, 3, 4, and then we are attacking the buy, coming closer to the bottom of the range that we just mentioned. And then we have this zone, and then looking left, you see that we have that zone right here. And this is exactly where we want to be. Right? This one would be also more or less valid for me. Not sure if it would win, but most definitely it will not lose much, because if kicked out, it would be somewhere around here, meaning break even or so. Okay, so this is basically the idea of our bigger range and how to validate it. The idea, guys, of the range and not trading inside it is very simple. It's not that we don't like trading inside ranges, but usually the price, if the range is too small, is not going to give you enough room when moving. Okay, I don't want to mix you up here with the rules and everything, but that's the logic behind it. So if you have a range of, let's say, 500 pips, I would be okay trading inside this range. Right? If I know there is enough room, let's say 1, 2, 3, 4, and I'm selling here, I know I have more than enough room to make money. Okay? So I want you to fully understand why we do the things we do and why we call these rules. It's not to make your life harder, it's to make money. Okay? So if you're not sure what we are talking about, ignore it and simply stick to the rule that says if you have Scorpios inside two larger Scorpios and you have a cycle on its own here, 1, 2, 3, 4 count, skip it. Okay? So that's about cat franc pushed lower for a stop loss. Euro Aussie, another one that provided here the loss. We had the 4-hour chart 1, 2, 3, 4. Now this is an aggressive setup, of course, because the trend line is not yet broken. However, we know that we are looking for the sales, and that's the 4-hour chart, right? So aggressive approach, as you can see here as well, multiple action zones, and we are at the very top right here. Clive, this is exactly what we talked earlier. Okay, that could be seen as a range, and the place where the price stopped multiple times and closed is then further extended with the spikes or the lower closes. So that gives you the range right here, and then you have the same range at the top. Okay, this zone. So that's the idea of the Euro Aussie sell trade that we took, and this is where we got kicked out. Pound cut, another one that we had. Now the tricky part here would be this Scorpio, which many people got confused with. This is, guys, what you're trading. 1, 2, 3, 4, and this is the first time MFD has switched down, and this is why you have a signal here, right? This Scorpio means more or less nothing for you, right? You did get the move, and now you're getting the signal. You didn't, the MFD didn't switch simply because we had a flat move here, okay? So MFD was just catching up with the price, and boom, now we have it. And then, of course, you have the trend line from above. You see that the price is clearly moving down, and we know that after this move, which is, let's see what kind of cycle, that's a valid move, valid correction, so that would be a double wave. Okay, we know that after the double wave we can expect the price to move higher. Once the target is reached, again we might expect the price to continue lower, especially when the trend line is being respected here. Jabberish on the chart, but yeah, sticking to the Scorpio rules without messing with your head again, that's basically the idea of the trade right here. So this one also pushed higher for a stop, and that again gives us minus 1% plus. Very, very quickly going over, what else do we have? Let's cover Divergence University. We did got one trade alone. This is Kiwi Cat. Aggressiveness applied here simply because we know the pair is still moving down. We're trying to catch the buys coming from around the 50% of the bigger cycle, all right? And since we reached approximately that level, this is the false break we're counting on, and we did have another attempt for a false break right here. Right, so divergence appears, that's our divergence right there, and we are looking for the 1 to 2 risk reward, covering the very last low at that point. All right, clear on this one also? Yes, but again we come to the situation where we simply can't trade every single opportunity. So we caught the loser, we couldn't catch at that point the winner. Let's say it this way. Okay. Libra code, guys. Moving on again, 23 right here. Libra, yeah, Libra was the biggest winner, and if you think about it, we have 3 versus 4, okay? But in reality, you get 2% versus 1% on each trade. And that's why even if you're around 50%, like in this case, you still make pretty good money. Okay, so let's see. Aussie Kiwi, we know that we're in a super good trend. We were discussing that as an opportunity for us to go ahead and look for the buy. So by the way, this is going to be also a valid SRS trade, if you ask me. 1, 2, 3, this is the line, and then you have another 1, 2, 3, but this one, is it a valid correction? Forced, yeah, not really valid, but still. Anyway, the formation we were talking about is something like this, flat correction coming after this move. We know the direction we were looking for, so either way, we know we want to look buys, to trade buys. This is where the setup appeared. Excuse me, double false break actually happened before we got the break above, which is super good confirmation for us. Okay, and then after the break above, we're looking for the pullbacks. Now, for those of you guys not familiar with Libra code, the idea is the following. You have move, correction, another move, deeper correction that creates a false break here, and then if the price breaks this high, the high before the false break, this is where we want to start the attack, right here. And that's exactly what happened. Okay, that's the false break, price is then breaking above the high, and the pullback is where we're looking to attack. Okay, I hope this one is clear what the idea is. So that's basically the Aussie Kiwi idea. Here on that case, we also had this range, which we later on said we should be trading for the buys as well. The overcut, buy opportunity. Okay, again, up move, down moves, false break, break above. Okay, you see how many times the price tried to create a false break but never broke the high above. That's the first attempt. Another false break, no break above. Another false break, break above. And only here we come and trade. Actually, the software gives you the signal that you want to be looking for the buys now. Okay, beautifulness, especially for trending markets. Libra code is a killer, as you can see in the statistics for this week. And there you go, we are cashing out. Oil, a buy trade. We know that the direction is currently up. We are at good levels to look for reversals, but there is no confirmation yet for us to go ahead and do so, which basically means we're still good for the buys, well, at least on that stage. What we have here is that you can see that this was broken, the previous high coming after the false break. By the way, that would be also a valid setup maybe on the 4-hour chart or the 1-hour chart. Again, false break, move and break above, correction, you buy and look for the buys, right? Same story happens afterwards. You have a move down, double wave, perfect. This is, by the way, probably a good situation to look for SRS trades as well. Does the false break, break above, we finally get the correction to the level that we're looking for. This is 38% of this move. This is how we look for the entries, guys. And price simply crashed down one straight move, collecting the stops. Okay, Aussie yen, this is another losing trade. Well, basically we said that we are in the longer term looking for the sales. However, in the short term, we might be expecting buys to come. That move down is a pretty serious one, but after the attempt, so basically what we have, let's analyze the price action. We have moved down, corrective cycle of some sort, all right, flat correction here, and then another attempt to continue lower. So basically what we want to see is if the price is going to move lower, break below, and continuation. And what did we get? False break, providing an actual break above. So this is the fight zone, this is the arena where buyers and sellers are fighting. And we know that this could be a potential range, but the short-term momentum is still up. And that's why we're looking at that moment for potential continuation of this corrective move. And this is where the setup appears. This is where we got the false break and then the break above. And finally, the correction was reached for us to look for the buys. And again, price pushed lower, going for the stop loss. What do you think about this sell scenario right here? This sell signal. Would you take this one or not? No good, exactly. No good. Why no good? Because the move down didn't actually cover the previous candles, guys. Okay, not even this one. So that's a tiny move. Okay, and in that case, the software is wrong. We should not be accepting this trade. Okay. However, it's better to have the software in a setup and in a way coded that's more flexible and manually assess whether this setup is good or not, rather than filter the software and don't get potentially good trades because you have too many filters. That's basically our understanding and the logic how the robots are coded, because you're not doing a fully automated robot. If that was the case, then yes, maybe you should have more filters, right? Just to make sure you're protecting your capital. But when you're doing it also manually and you're managing the robot, it's better to have the flexibility and more signals and then cancel them manually rather than skipping entirely a good signal. Okay, that's Aussie EM Gold. Another good opportunity for us, 15-minute chart, as we said, only the lower time frames providing us with the good opportunity, simply because the higher time frames didn't have the chance to provide anything with such strong momentum. So again, here we go. We had the move before. Obviously, it looks like a corrective cycle. This is, again, guys, you're probably sick of this explanation, but it's really powerful. Okay, it took that much time for the price to go ahead and move that many pips. So looking at the same period in terms of times, the price managed to move that many pips. It's really simple when you look at it to manage to understand that this is most likely a correction, right? And furthermore, we did get kind of a cycle here on its own, triple move up, false break, break below, and now we know that we're looking for this move to the downside as well. Okay, more or less a perfect scenario. I simply love it. This is how our setups should look like. Okay, and boom, the logical happens. Now that's what I was talking about with the previous example. This is the first leg, this is the correction. Once you break below, you want to see that. You want to see the price breaking through this barrier, right? If it creates a false break only and it starts moving up, chances are you're going to see again the highs of the correction being reached. Okay, there is obviously not enough momentum in this move down in order for the price to continue lower. Okay, so that's why sometimes when we say we want deeper correction, the logic is very simple. If you don't have enough room from the stop loss, from entry to stop loss towards this last low, you might be in trouble, because if you, let's say, entered here somewhere, right, and you have a false break, you don't have enough room here. In that case, more or less, we have the distance. Depends, to be honest. Darbright is saying there was that big candle right here. Would you exit the trade manually? To be honest, in these conditions, in general, probably yes. Let's go ahead and see if we have divergence there. Just 1 second. The first thing I'm going to check, of course, is whether we have divergence or not. Was that here? Yeah. Alright, so let's just remove a few things. So that's the setup we discussed, right? And this is the spike. You see, there is no divergence in that case. That means there is momentum behind this move. Lower lows on price, lower lows on the histogram. And that tells you this spike is probably not going to push the price higher. If there was divergence here, I would definitely consider closing the trade, or at least breaking even it with target 1 in the pocket. But don't forget where we stand on the higher time frames. Right, this is the channel, and we did broke this trend line here. And the breakout came out pretty powerfully. And again, this is what you get from this one and from the other one as well, lower lows. So any pullback makes sense to provide you with good pushes lower. Now, because we had false break number 1, if we get false break number 2 again with this divergence, would be tricky to go ahead and sell, right? Because we have to, might have 2 false breaks, not yet. But as long as there is nothing against you, why cut it? Right? I mean, momentum is here, so you're expecting the price to continue lower. As you can see, it has now placed itself below the previous low right here, which is a pretty good indication that this range, as long as it holds that zone here, is going to break lower. Exactly. The trade itself was also bullish. No, wait, what? Alright, but bottom line is, I believe you understand the logic here why I would keep the trade and not respect the price action in that case. Okay, that's Goldie, and last one, Euro Yen, and we call it a day today, guys. Euro Yen 15-minute, here we go. We know that we are expecting for the price to continue the push higher, more or less. We still have no confirmations for the sales. So the setup appears inside right here. False break and attempt second attempt actually. First one, and this is the second attempt to break above this pattern. Okay, false break, break above, tiny pullback, and we are looking for continuation up. That's all. Unfortunately, price was trying to play around. Another attempt to go higher, it failed, and then finally took the stop loss right here. Okay, guys, any questions on your side about any trade? Okay. In that case, wishing you amazing weekend ahead. Thank you, Tiat. Thank you. Go recover after this tough week, guys. All the best, and I'll see you in the Telegram groups. Bye for now.